JB here. Hope everyone's doing outstanding. Sunday, April 6th, almost 10 p.m. Talk really quick about the week ahead. Obviously, a lot of things going on. So I normally do my morning rant. I'll do that as well. But just to kind of get ahead of some things and just some things I kind of want to I guess put things in context. So I actually have the screen share. So I think it's working. You probably, if you go into the audio, you can click and you should be able to see my screen, I think. But either way, I'll talk quick about the market, some of the names I'm looking at, go from there, and actually just more overall stuff. But I mean, obviously, I'm not. I always talk about the support resistance lines on the S&P, and I have the annotations from over the years, but the lines have continued to been pretty spot on. Unfortunately, especially on the downside most recently. But uh, take a look, 504, I think it was 505.48 was the August low. And we came right down to that late Friday. Looked like that was going to hold, and we sold to lows. But there's so much anyway. So just overall picture, so much stuff going on. If you just even if you're watching the headlines, the news, all these different articles trying to talk about all the ramifications, all the different intricacies of what's going on with the tariffs, how they impact the economies, the global economies, what does it mean for each country, and it's all like skewed net negative, right? I mean, I kept saying at least last week and part of the week before, and when the tariffs on the cars got announced for 25% a couple weeks back or a month ago, that I thought this was just a bargaining chip, right? This was a way to get try to get some favorable trade deals done with the countries, right? I in no way did I expect it to be that when that poster came out on Wednesday, I didn't expect it to be that to that extent. So that was kind of the surprise. And then when Thursday and Friday came through, I thought there was gonna be headlines that there was gonna be some deals worked out. And then when that didn't happen, it's like this is not gonna be good if the tariffs remain as they are. I mean, it's just not it's not even question, right? The U.S. market will go into recession. The global market will probably go into recession, right? It's a huge deal. So right now, coming into this weekend and Friday, I thought there was more risk for some kind of squeeze than there is for any more downside. So that's kind of how I was playing it, and I still think that's going to be a possible scenario here, despite what the market's doing right now. And I don't know if this is all messed up. I think I'm doing it. Are we still going? Yeah. Uh, but I mean, so take a look at the futures. And my fear would be that we get a limit down and then we don't have a lot of action, right? There's not many times over the years where we have a limit down right at the futures open on the overnight session, and then you have to wait till the market to our late morning for the futures to reopen. So thankfully that didn't happen, and now we've kind of got a bounce. You had the Nikkei down, limit well, it got halted down 8%. That's starting to rebound a little. China markets, the Hang Seng was down over 10% earlier. That started to bounce, and even the China market's only down 4% right now. And I don't know. I mean, I looked a little bit ago. I don't know if that's still the case. Uh, but we'll have to see where we are tomorrow at the open. So just some things that just to kind of put things in context, right? So first, the support resistance. Once that 540 handle broke on a SPY, I was concerned about the bear market coming, which would be about 490 in a SPY. We got down to 42 here in the overnight session. I don't know if that's it. I always like to see capitulation, like a big rip at the market open, a big sell off, and then a reversal. I don't know if this overnight session is going to count for it, but that's the first thing I would like to see. But 490, that's kind of key spot. We got it down to 482. And then let's see if I can pull my charts here. So, and then you look at the longer term of my charts, right? Just pretty impressive. I'm not trying to pat myself on the back here, but it was like 430, 538, and then you could see we came all down to 505, and that was the August lows. And then you start looking down into May, and May's I think it's 482, and then I think the start of 2024 was 467 on the SPY. So well, worst case scenario here. Even I'm not saying we get down there. My hope is that there's going to be some reconciliation. We're going to get some communication. There's going to be headlines this week, and then whether some or all the big tariff issues get worked out, especially with China, right, and Southeast Asia. If those get ratcheted out, then we can work on the EU, which aren't as severe, and then those individual countries. You're reading about all these different countries that are just getting, it's almost like collateral damage, right? These countries that we've done, there's a nice little article, I don't know if it was in the Wall Street Journal about this country that's inside of South Africa. I forget the name of it. Was actually I think in the State of Union address, they announced it as one of those cuts from USA's from Doge. But anyway, they have like a 40 or 50% tariff only because they export as part of a US deal that was done back in the 90s or the 80s, where they were giving incentive to manufacture, and the US imported those, right? So because it was the US imported, and they don't import because they have a very bad economy, or not that strong economy, or a lot of the countries in poverty, that obviously they have a huge trade surplus with the US, which in turn means the US has a trade deficit, and then they use that crazy formula which took the deficits and pretty much divided them in half. So the percentage of the deficit, and divided it, or their surplus, divided it in half, and that's how they came up with the tariffs. So this country has a crazy tariff. So some of these tariffs that were just put out kind of as collateral damage. You hope all that gets rectified. But anyway, needless to say, that's what I'm hoping that happens this week. So this week we still have earnings. So the starting Q1 earnings season, you have the banks at the end of the week. You have airlines. I think American Airlines reports midweek. And there's another. I'm trying to think of the other name that reports this week, and then we get CPI data on Thursday. So it's the jobs report came out on Friday. It was stronger than expectations. You thought, wow, it was going to be a horrible report, and then the CPI data this Thursday is probably going to be the coolest read we've seen in like 3 years or 4 years, and it's probably not going to mean much anyway, unless unless the tariffs are, let's say there's some kind of headline that comes out, and POTUS says gonna we're gonna stall the tariffs for now, or whatever might be the case. I mean, the market would go bonkers, but you can't rule some of that out. All right, so just some more context here, and that's kind of what I'm looking this week. Is that to me, I think the odds, or the probability that of more of a squeeze at some point than a big crash from here is uh, you know, that's kind of what I'm looking at, playing potential bounces. And that's what I was doing on a little bit on Thursday and Friday. Obviously, the put premiums are expensive too. So even the risk reward, I'm playing some puts now, not the same as it used to be. But so put it into context. So some of these moves, right? So the difference between this big pullback we had so far, historic, and the others over in, especially in recent memory for me, is that this is all self-induced, right? This is there's an elixir for it, there's a fix, there's a medicine for it, right? And that's all. The medicine is he comes out and they work out deals on these ASAP, right? Or push them or halt them or whatever, right? Back, the financial crisis. I remember trading. It was like 2008 in the summer, and I was trading gold and oil. Oil, I think, hit $130 back in 2008 in the summer, and it was like everything was normal. And I remember Lehman Brothers. You had Kramer talking about it in the spring. Oh, it was $100. Oh, this is a buy. This is a buy. And then the market was, teetering, and you heard some rumors and rumblings, and then you had the Lehman moment in September, and that was the big move. Again, that Lehman moment, that wasn't like self-induced. I mean, I guess maybe someone could have seen the writing on the wall, but even that, it was like, and then it was collateral. That was just everything got brought in and whatever. But there wasn't an easy fix, and the uncertainty there was like, what's the resolution? What other companies going under, and how much bailout money is out there, how much is on the hook for the government, how much does the government have to, so there was a lot of that there. I mean, it's different this time, right? Self-induced. And then some other one of these moments, and you take a look at the chart from, this is the flash crash. Anybody trading back in 2010, we're right out of the great recession, I guess you would call it, right? uh, Great financial crisis, whatever it is. And this story now was all about Greece and Europe and the debt zone crisis, right? And Greece was going to default. You had Italy and Germany was bailing them out, but they were at crazy terms. So Greece was having riots every day, and I remember CNBC would be right in Greece, and you would see fire bombs and stuff. And you think the world's coming to an end, and there was a lot of uncertainty with that too, and didn't know if there was going to be rollover. And sure enough, what happens? Uh, we had the flash crash. Markets were selling off that day. I remember it like it was yesterday. I had Apple puts. I think Apple was 400. I think I was talking about this last week. Apple was like 420, and I had like the 400 puts. And I look away from the screen, and boom, next thing I think it went down to like 360 in a matter of a flash. And I'm trying to sell, and you couldn't. Everything was moving so quick. Uh, but then things rebound a little bit, but it was like the biggest move intraday or something. Up to that point. And to me, it was like we just came out of the financial crisis, and then we had this move with the flash crash. I'm like, how can you trust the markets, right? But then, sure enough, what happens? Markets bounce around. It was a volatile year. End of the year, we bounce, rally. and don't look back. And then some other ones here. This is the one I talk about a lot with Asia, right? So China, there was a lot of concern with China and their debt. Um, and there was a huge sell off, and the China markets rolled over in the U.S. as well. But a few times the U.S. markets were halted. So I talk about and try and keep things in context. But back in 2008, 2010, 2015, things have evolved, right? Where the markets are a little different now. Back in 2008, we we didn't have circuit breaker halts on the overall markets to the extent we have now. Now we have the halts and restrictions on trades and spoofing and all the things that cause some of these issues. The flash crash in 2010, which they still blame on some guy, some 33-year-old guy living in a brick house in England. Uh, they said that he was spoofing and his algorithm caused the flash crash. But I mean, so he got the blame. But so that was that, and then obviously we had COVID, and again, you take a look at market sold off, and then boom, we're back. Not saying it's a similar setup on all these charts, but the difference, the only thing similar to all these is these weren't self-inflicted, right? I mean, well, you could say the flash crash was, I guess a little bit, but there was other things going on, right? The Greece, the eurozone debt zone crisis, and all that fun stuff. This one's this one we know what the medicine is, right? We can get Monday with some updates. That would be the medicine for the market, and then we can at least alleviate the huge sell off and maybe have somewhat of a bounce. So that's kind of what I'm looking at. And it's almost seems like it's peak fear. And you read FinTwit, it's almost like harmful because all it does is make you think that the market's gone, like we're just gonna crash, and maybe we are. I don't like to rule out scenarios like that, but it's like you do this long enough, you've seen most of the stuff, right? The issue is if there's no update in the coming days, then I'll change my tune. But so that's kind of it. So it's I don't we don't have a Lehman moment yet, right? So that would be the other concern. Sicko Man posted over the weekend too about and on Friday, like what funds blowing up? When's that going to happen? Because if some of those things start to happen, obviously there'll be some issues. But we've had funds blow up, right? So again, I think things are different, right? I always say, well, not always, but fool me once, shame on you. Fool me twice, shame on me. I mean, GameStop, right? We had that huge squeeze. You had Bill Hwang. You had that other $3 billion fund blow up that caused all these massive squeezes on names like iRobot and all these other names that they were short. And so it's like if your fund is positioned now to the point where you haven't learned your lesson in 2008, you haven't learned your lesson with the GameStop, you haven't, then shame on you, right? And well, shame on me, but shame on that person because uh, it's like then you deserve to get smashed. So that's why I always when I see people, that funds are getting blown up. I mean, maybe right, but I don't picture it the same circumstance like what happened with Lehman Brothers when everybody's around the table over a weekend figuring out who's getting chunks of their assets and bailing them out for pennies on a dollar. Uh, so that's that. So mechanisms and plates, and also different times, right? So 2005, 6, 7, 8, the U.S. mortgage rates were like 6%, right? So I mean, the housing crisis was built up a lot on leverage and stuff, but it wasn't like rates were. I mean, we were under 3% for some times in 2021. So, uh, and also the Fed rate was at 2%. So right now we're at 4 and whatever it is. So the Fed has room to do things, and not only that. Back in 2008, no one did a Project Twist, a QE, a QE1, a QE2, the quantitative easing. Nobody knew all those. These are all new financial gadgets and mechanisms to prop the market and prevent crazy things from going on, right? So that's why of course, in hindsight, if I had known that, POTUS was going to come out with that chart of the tariffs on Wednesday, I mean, it would be like the no-brainer of the century. But unfortunately, I didn't. And then, when that chart came out, yeah, I still am like, there's no way that this is going to continue at those rates. It's just not, it just can't be. And they let it go into the weekend. And yeah, I just hope they don't let it go much longer. Otherwise, everything I'm saying right now and before won't mean anything. Uh, that's that. So just some areas I'm watching, overnight. So we already hit 48.260. Those are the lows. 505.48 was the August 5th low, the yen carry trade issue. And then 47.65, that's April lows. So pretty much, 13 days from now, if we're at 487, we'll have erased the entire year's worth of gains, which not it's not like it hasn't happened before. It stinks, right? Um, and that's that. So then just some individual names that, the VIX, which unfortunately was flashing like not risk off signals, right? I mean, the VIX was kind of hanging there, was dipping. Monday, Tuesday was looking great. I'm like, wow, the market's pricing in some great news come Wednesday. And then it, pulled me up. It's still not at the levels it saw back at the yen carry trades fiasco back in August. I mean, I think it was up 25% earlier. We'll see where it is now, but 40, I don't have it up here. And SPY's at 492. And then some other charts I posted over the weekend. Again, some things that kind of give me uh hope, I guess. And it's ironic because the instant I posted, 2 hours later, it tanked. But Bitcoin was actually up last week, up 0.5%. If you follow crypto since Bitcoin since 2011, 2012, it tend to be like a beta, high beta, right? It would trade correlation with the S&P and Nasdaq. Anytime the Nasdaq sold off, the Bitcoin would sell off, and it wouldn't be one for one. It would be a one correlation. It would be like a three times. It would sell off if the S&P was down 4%. It would be down 15-20%. So to see it flat with the market selling off, the S&P down 9% last week. I mean, that to me, that was like, okay, here's a couple two things, right? One, maybe the sign that it's finally reached the status of being a store of value, and flight to safety, right? I mean, and then when you have those two things out, people always used to say, oh, it can't be a store of value because it's volatile, and that doesn't have an asset holding, the asset doesn't have a physical asset holding its value either. And you just erase one of those, and when you see one of the more volatile weeks in recent memory, and it's pretty much flat. So that kind of gave me a little confidence coming into this week. And then sure enough, we had the dip, but I wouldn't be surprised to see it back into the green at some point in the coming days. And then some other names. And so it's just individual names. And, if Bitcoin's holding up, and you looked at strategy last week, I mean, impressive. So, and if you're looking for an asset, it might have some outsized moves on both sides, but then also protection for move. I think strategy might be one. And of course, I'm going to talk about GameStop too. But Ryan Cohen, who was posting about Trump for like the last year on his Twitter, and then he totally reversed course the last couple of days, kind of saying, "Oh, I think I voted for the wrong person." But needless to say, I mean, take a look at GameStop on Friday. It was up 11%. I don't know why I don't have. You know what happened? I pulled up. This is this is GameStop from 2010 when it was a $3 stock. Why is my chart not right? I'm like, oh. So anyway, GameStop was up over 11% on Friday. It's 22 and change here in the overnight hours. I'm I would not be surprised to see it rally tomorrow, or at least to start the week. And then some other names, Wayfair was the one I traded on Friday. Got lucky with that Vietnam news. I mean, if Vietnam came out with some news, they want zero tariffs, like they're going to do whatever it takes. Uh, so that's a good thing there. And I don't want to get into like I'm not an economics professor. I'm not any of that stuff. But to me, it's like the U.S. it's a consumption economy, right? So, well, I mean, that's just maybe that's my opinion, right? We consume material, all that, right? Um, but then you have economies they're producing economies, and you look at China. It's a $1 trillion trade deficit, right? I mean, trade surplus with all the countries, right? So if uh, they always have they have plans, they have their meetings every year or 5 years, and then they come up with these plans. A lot of them are producer based plans, like how much are we going to produce, how many real estate buildings are we going to build. I mean, these are all rants for other days. Shouldn't be going on rants about the ghost cities, but like China built all these cities to almost to like fuel growth, right? Because they want to stimulate, they want to be the number one economy on the planet, but because of that, they produce. So if the US is able to produce, the United States is able to produce the same goods and services at the same or less cost, we would have the jobs in the US, right? But we can't, because regulatory, environmental, right? All the things that go into having a factory, hiring labor, uh, insurance, health insurance, unemployment, everything that gets paid in. Uh, it's a heck of a lot more expensive. So just to slap a tariff on China so that we get those jobs in China or Southeast Asia over into US, and then expect those people, those warehouses and factories to make the same product at the same price, that's not going to be any more expensive for the consumer. It's almost like I mean, did anybody look at any of this stuff? But anyway, so needless to say, hopefully they work stuff out with Vietnam. Wayfair's a name. It's pretty much like a drop shipping company, but Restoration Hardware as well. I mean, it bounced uh, Friday after that news came out too. Similar story. Uh, but that's a name. And then some other names that are, I wouldn't call them recession proof. I remember back back in COVID, before we knew what was going on, right? With the uncertainty, I was looking for, you look for recession proof plays. And I always talk about the pet industry because some people treat their pets better than they treat their siblings or their significant others, right? If there was a boat sinking and you can only keep one person and your significant other and your pet was on the boat, some people might pick the pet. That's I mean, as crazy as that sounds, that might be some realities for some folks, right? So for me, I always look at that as a recession-proof business. So for me, I'm not saying to get chewy or whatever, but then you have to look at healthcare too. And some of the name like United Healthcare has been doing well. I don't know if it's some other reason, but then I was looking at Gilead, VRTX, and some of the other bio names were showing relative strength last week. So if we do get somewhat of a bounce, or if we even stay flat at the open on Monday, I might look for some of these names for bounce plays. Gilead, VRTX, which just barely broke its 50-day moving average on Friday, and it's right near its 200. So if it holds that, I think it heads back over $500. Um, and then some other names like similar to Wayfair, you have Deckers, right? So another name, I mean, had decent earnings, but just a little snafu in their guidance, and the stock has been destroyed. And then the tariffs is kind of pouring salt on the wounds. Another name that you saw a reversal on Friday, despite the market selling off. It's, I mean, maybe it gets to 120, 125 or so next week. So that's that one. And then the last but not least is Nike. And, I thought it was going to be a good play heading into Wednesday because if you take a look at Nike, I mean, it's hit hard times, but it's on a turnaround. It had its earnings. The earnings were actually pretty solid, but the market reversed. It was actually higher after earnings, then reversed it in the after hour session, sold off, and then it looked like it was bouncing Monday, Tuesday, Wednesday, and then you see the big sell off, but then reversal on Friday. Could be another name. And then I keep talking about these 3 times ETFs. And if you look at, and I probably should have posted some of the historical charts on those, which I think I did on the watch list, uh, but they break, right? If you traded, I think it was COVID. You had the 3 time VIX, right? The VXX, the UVXY. I think they got blown up. There was some issue. And people lost lots of money on both sides. Uh, but they can also be fun. So I keep looking at SQQQ, and I was going to look for some possible spec calls from Friday into this week. I kind of passed only because expensive on a risk reward basis, but maybe on if how things play out, that'll definitely SQQ. I was saying it last week. If things get crazy, and when we already got down to 42 on the SPY, I'm talking like 430, 420 on the SPY in a very short period of time. These ETFs can really go parabolic. So that's it, folks. I hope I didn't miss anything. Let's have a great evening. Hopefully get some sleep. I'll be back on audio tomorrow morning. Rock and roll.